software can calculate EITC, CTC, and AOTC in seconds, but the IRS does not let you outsource your due diligence to the program. Requirement number 2 says you must compute the credit using the required worksheets from the Form 1040 instructions or documents that contain the same information. On the EA exam, they love the idea that the software did it is never a defense. Think of the worksheet as your roadmap. It forces you to consider the right inputs: qualifying child tests, income limits, phase-outs, and credit calculations. Even if your software generates an internal worksheet, you still need to be able to show the same information the IRS worksheet asks for. And you must retain records showing how you computed the credit, not just the final number on the return. Requirement number 3 is the knowledge standard. The IRS frames it as, what would a reasonable and well-informed preparer do? This is the big one. Over 90% of due diligence penalties are assessed for failing the knowledge requirement. Translation: you can file the right form and still get penalized if you didn't think critically, ask questions, and resolve red flags. So, what does reasonable and well-informed look like in practice? You apply common sense to what the client tells you. You check if the story is complete. You spot inconsistencies, like dates that don't match, income that doesn't fit the job, or a child who lived with 2 different taxpayers all year. Then you ask enough follow-up questions to reasonably know the return is correct and complete. The interview piece is not optional. The IRS expects a thorough, in-depth interview with every client every year. Prior year returns help, but they don't replace asking. And here's the exam trap. It's not enough to ask questions. You must document the questions you asked and the client's answers. If it isn't in the file, it basically didn't happen when the IRS reviews due diligence. Requirement number 4 is record keeping. For each claim, you must retain Form 8867, the applicable credit worksheet or equivalent, and any documents or written proof you relied on to complete Form 8867 or determine eligibility. You also need a record of how, when, and from whom you got the information, plus your follow-up questions and the client's responses. This is how you build a bulletproof file. One more nuance. You are not always required to request documents proving relationship and residency for a qualifying child, but you should request documents when the information is incorrect, inconsistent, or incomplete. That's the bridge between requirement 3 and 4. If your common sense review finds a red flag, you ask more questions, and you may need documents to resolve it, and you document that whole process. What is IRC Section 6695, and why does it matter to tax preparers? One option says it's about abusive tax shelters. Another says it's about disclosure or use of taxpayer information. Another says it covers penalties preparers may face connected to preparing returns for others. And another says it's about continuing education requirements. Think about it. The correct answer is that IRC Section 6695 outlines penalties tax return preparers may face in connection with preparing returns for other persons. It includes penalties for things like failing to sign the return, failing to provide an identifying number, failing to give the taxpayer a copy, and failing to retain required records. A tempting wrong choice is the disclosure of information option, but that's a different penalty area. Marisol is an enrolled agent. Her client Daisuke says he used his automobile 100% for business. He doesn't own any other vehicles. Can Marisol rely on that statement without further verification? Options include yes, no, because she must make reasonable inquiries, no, because she must verify with third parties, or no, because she must review a mileage log and other documents. Think about it. The correct answer is no. She must make reasonable inquiries of her client. Under Circular 230's diligence standard, you can generally rely on client-furnished information in good faith, but you must ask follow-up questions when something seems incomplete, inconsistent, or implausible. 100% business use of the only vehicle is a classic red flag. The tempting wrong answer is that she must review a mileage log, but the rule is reasonable inquiries, not an automatic document requirement.